that's most critical, which allows us to control it more effectively. So the left hand needs to know what the right hand's doing. So our triage unit needs to be able to talk to our employee liaison and let them know exactly what happened, what they're dealing with, what their family situation is, so they can actually appropriately take care of the employee. And all that folds up to the claims manager, so we can inform the claim adjuster on exactly what's happening, what information we have to make sure that the employee who's legitimately injured gets the highest level of care possible.
Welcome to Insurance Shoptalk. This is the podcast where the world of commercial insurance gets a little closer to home. I'm your host, Eric Stein, and in every episode, we're taking a deep dive into the insurance industry, from the latest news and trends to in-depth interviews with insurtech experts, carriers, and agency newsmakers. We're covering it all. So sit back, tune in, and let's start the conversation. So I'm really excited. I've got John Tillery in today with Whiteboard Risk, one of the principals in the agency. They're a property and casualty insurance agency located in Southern California. I've known John a while. I've kind of watched him, grow his business from pretty much nothing to really, I'll let him tell you how much revenue, but he's crushing it. And they've come up with what I've always admired. When I had my program at Insured Solutions for high deductible with Zurich, I created a little bit of a risk management system that involved basically outsourcing a lot of the services that I would use for clients. I think in the agent world, we all do that because it's really hard to bring it in-house. But John's figured out a cool way to structure his program for risk management and do a lot of it in-house, majority of it. And so he was kind enough to come on board and kind of let everyone know a little bit about how it works and what the effect has been on it. But John, again, thank you, man. I'm excited about this. Thanks for coming on. I really appreciate it.
Yeah, thanks for having me, Eric. I appreciate the kind words. Yeah, we've known each other for 15 years. I think I was back in Chicago when we first met, did some deals, and I've been doing Whiteboard for the past decade, which is crazy to say. We're
You
here
don't look that
now.
old. You don't look that old. I think you started when you were 15.
Yeah, yeah. 26, but close enough. Might as well have been.
But so John, talk a little bit about your background prior to Whiteboard, and then like how you put together Whiteboard, and then we can jump into the other pieces.
Yeah, for sure. So I got a job at a small to mid-size regional agency right out of college called Wine Surgery. I was there for, I don't know, four years, something like that. And I was taking folks out of the assigned risk pool, put them with Insured Solutions, which was like my only thing I had to do. I mean, it's really difficult to, like, as someone who's young, to know how to dig into policies and find, areas where they're underinsured or, overinsured, anything like that. And getting the time of day from these C-level executives was very difficult. So like I sold on price. And what's cool about the assigned risk pool is like I know the price, I know the experience mod. And for those folks that are in the assigned risk pool, a PEO is an excellent band-aid solution to the problem. And so got my teeth doing that for a little bit. And then we decided to start Whiteboard. And so Whiteboard was myself, Jeff, and Dallas. Jeff was my college beer pong partner and best friend. So we met at a beer pong table. And then a gentleman he did deals with named Dallas, he came on board in the conversation like 3 talks into it. And so I never met Dallas in person before we signed paperwork and went into business together, which is grossly irresponsible, but very thankful it's all worked out. So we didn't have any investors. We didn't have any like loans from a bank. No one would give us anything. So we kind of built this thing from the ground up just by banging on the phones and making cold calls. So we initially started more of an advisory firm. So come in, help with risk management, HR, and our tool to do that was called BizAssure. And so Dallas and Jeff's previous agency owners blocked us from getting this platform that we were literally putting our whole business model on. And so like 3 months after we started, we had to completely retool. And one of the areas that we knew we wanted to get into is high experience mods. And so from there, we put together kind of like a lot of agencies do is like a piecemealed hodgepodge of different services that help with work comp. So they might go to MedCore or company nurse for their triage. They might go to WCCA for their claims management or get an independent claims manager, just come in and step in and help with, not only work comp, but maybe like a claims advocate for EPLI or cyber or something like that. And so we were doing all this, and we figured like the best way for us to do this is take everything in-house. The left hand needs to know what the right hand's doing. And so since then, we've taken our entire platform and internalized it. So everything that we have from our W-2 employees is entirely vertically integrated. So we have our own triage system. We have our own technicians that will go out and treat folks under the OSHA guidelines of first aid. We have our own work comp specific claims managers. And we have our own employee liaisons whose entire job is to hold the employee's hand throughout the entire life of injury and their claims. We have our own Salesforce developer who's built our custom portal, which is really, really cool with a lot of actionable data on there. So everything's in there, and it allows us to actually do the job of reducing clients' experience mods, lowering their frequency, lowering their severity, lowering their litigation through proactive risk management. And so that word gets thrown around a bunch, and mostly what folks are talking about when risk management is like, let's get you a policy. Hopefully the carrier can come in and help you with some of your safety. If not, we have, a third-party safety company that come in, do an OSHA review, tell you, do hearing tests, all that kind of stuff. So it seemed it's important, but I would say it's definitely not the lion's share of what needs to take place when it comes to managing someone's work comp. The lion's share of it is you are going to have workplace injuries, and after you have that workplace injury, if you leave it up to the work comp system, the doctors, the attorneys, the adjusters, the employee, and your broker all make more money when you have claims. So there's an inherent incentivization by all these parties, and you as the business owner are in a place where your interests diverge from everybody else immediately. A doctor wants to overprescribe and overschedule. These attorneys are not Harvard Law graduates. These are the ones that are bottom of the barrel ambulance chasers who are essentially throwing everything at the wall and see what sticks. The employee has a disincentive to come back to work because they collect 2/3 of their wage tax-free. The broker, if your mile goes from a 100 to 200, the broker's making twice as much money, not because they're doing more work, just because it's a higher ticket item now. And then finally, the adjuster from the insurance company, not knocking insurance companies here. This is just the way the experience mod's calculated, is that any money that's spent in the expense portion of a claim, so the defense and investigation portion, has zero impact on the client's experience mod or future premiums. So you'll often see an adjuster looking to settle claims as opposed to fight them. And so everybody knows this. Every single business owner that's had work comp claims knows this intrinsically. They know that there's a problem with the work comp system. They know they're getting fucked. And so what we've done is diagnose the actual problem, put all the players on there and how their incentives are, and then built a platform with that first principles understanding on how to protect the business owner. So that's what we've done. We have about 50 employees on staff now, about 7 million in revenue. We work on a purely broker record model because we're not trying to put you with a better carrier, right? You might be with ICW, which is a fantastic carrier, and you don't need to move from there. You need someone to step in to actually handle the injuries at the time of incident and shepherd this employee and the adjuster all the way through the claim to make sure the least amount of claim dollars paid out, the claim is closed in the shortest amount of time, and the employee gets the highest level of care possible. So like the trick is really just giving a shit about the employee and making sure these other parties aren't operating on their normal modus operandi, which is let's just extract money from the insurance company. It caused all the rates to go up. So it's like that's what I'd say. That's how we've done it. It's been really, really cool. It's been a ride. There's no sign of us jumping off of right now because we're growing pretty quick.
Absolutely, man. That's awesome. I mean, yeah, the thing I saw too is that, like you said, that the clients knew and know that the system's broken. And then you got, different types of clients who are at a different level based on the size of their business of knowledge. So what I noticed is that, the client that didn't have a lot of knowledge thought, this was like an auto claim, just turn in the claim, turn it in and expect everything to just to run and the employee get taken care of and then everything will be fine. Yes, costs might rise, but it's a claim. And so everyone's working on the client's behalf when they're really working for the employee,
100%. Yeah, it's like yeah, you kind of mentioned it. The level of sophistication for these clients like can vary widely. But I think at the end of the day, like the consistent thing that I always hear from prospects and clients is like, we know we're getting hosed. We know the system doesn't work well,
They
but
just
there's
don't know
not.
how to deal with it. And that's where you come in.
Yeah, yeah. So it's a very, very good spot for us to be in. A lot of agencies say they do claims management, and this is like part of our challenge is when we call up a prospect and say you've had a high mod for the past 8 years, and we tell them like, hey, we do claims management. Like, well, our broker does claims management. So the big difference for us is how do we bridge that gap when a broker says they do claims management, we say we do claims management, we mean something entirely different. Like an example of that is we brought on a broker from Alliant, and I think on their claims team for San Diego, they have 2 people, and that's it for their like Alliance enormous. We have a dozen people on our team, and we're like a tenth of the size. It's because there's a lot of work that needs to get done that just won't get done. It's more monitoring claims and reactive claims management as opposed to proactive claims management is where we step in.
Yeah, I guess a lot of the agents will just have like one, or like you said, 1 or 2 people on staff and claims, and then they're mainly just air traffic control, or trying to focus on maybe the higher claim amounts if they are,
Yeah,
if they're good, and following those through with the carrier adjusting
yeah.
team. Um, so no, you hit, yeah, I was wondering how you got around that because yeah, a lot of the larger agencies do offer that claim service, so you're getting more in the weeds on the claims.
Yeah, it's just education. As soon as someone figures out exactly how it works, like, well, they know it's not getting done. That's what's cool about our business is I never have to know if what you have in place is working or not. By definition, you have a mod over 100, like it's not working. So it's a really cool position for us to go in and say, hey, this is not a question of whether your carrier's doing their job, your broker's doing their job. Whatever you have in place now isn't effective because you guys are paying double what you should.
Makes sense. And I guess, have you educated your carriers that you go on a BOR model, and that when they start seeing all these BORs flying around all the time, they're wondering like, what do you do? What's going on here? And like
Yeah.
you've got them dialed in.
Yeah, it's really cool. So we're part of Pacific Interstate Insurance Brokers, which is a great organization for anybody starting an agency in the West Coast. They're spectacular. So they're an agency aggregator. When we first started, we couldn't get any appointments. So we decided to go with him. They have pretty much every single market that we need. We have, I don't know, probably 10 additional markets that they don't have. But to start, it was really, really helpful. And what's cool about it is every single year for every carrier, they send out loss ratio per agency. So we get to see where we stack up compared to other agencies that are like us, like not large agencies, probably $1 million to $20 million in revenue. And we're always at the top 3. And obviously there's some luck involved there, but the reason why we're always there is the same thing, is we're actually doing the job of claims management. A lot of that happens at the beginning of the claim. So our ICW book is about $10 million in premium, and we had a 6% loss ratio.
Wow.
The president of ICW found out about this, and it's like, what are you guys doing? So I was able to walk him through exactly what we're doing. And now what's cool about our underwriters is they know that when we put a piece of business with them, it's not, the past 4 years that they have to look at. It's like, when did you start with them? There's a company out here called Care West. They're a smaller carrier, but our underwriter has a joke like in the office. It's like, oh, it's called the whiteboard effect. I can tell you to the month about when whiteboard started with this client because it shakes out in the data. So it's a really cool position for us to be in, like with our underwriters, because they know when we give them a piece of business that we control, it's going to be profitable.
Right. And you write the whole all lines for the client when you come in, right?
We cherry pick. So we try just to do work comp, but if it's like someone with an auto fleet of like 50 or 60, like we'll take that all day. That's really good for us. But if it's like a contractor who has like $140,000 in premium on work comp and $8,000 on their GL, like we don't want to do that. There's E&O exposure there. It fucks up our team's time
Yeah.
tremendously just doing another renewal. So for us, we cherry pick the ones that we want to write, and those that we don't, we leave it to the other agency.
No, it makes sense. And that that liaison, employee liaison concept is that's unique, definitely among agencies. I've seen some like BBSI do it with the PEO model out
Yeah.
there. But that is really unique. Like, can you want to expand upon that a little more, like how that works?
Yeah, so our employee liaisons are there to shepherd the employee through the process. So as soon as our technician goes out, they get a text from the employee liaison. All of our employee liaisons are bilingual in English and Spanish, and their entire job is to hold the employee's hand throughout their entire life, their injury and their claim. So if they need help getting prescriptions or they can't get a hold of the adjuster, if they don't like the care they're getting from their doctor, we file a change of care for them. If we can talk to their spouse because their spouse wants to be an attorney, we dissuade them of that position because the facts are right out there. It's like if an attorney gets involved, they're going to take 30% of your settlement. Our job is to exactly what an attorney's is, make sure you get everything you're entitled to. We're not the insurance carrier. We're not your employer. We're here as your advocate. And by having someone who actually gives a shit about them and cares and holds their hand, make sure they feel heard and understood, you see litigation rates go down tremendously. And
Right.
so it's
I mean,
really
just like
great.
you said, if they get disgruntled and part of like seeing the doctors or what have you, or don't show up for their visits, they start turning negative and it gets worse for the
Yep.
client.
Yeah, exactly. So a lot of the work is actually setting expectations at the beginning of the claim. I say that's on every single one of my first meetings is like, if you look at workers' compensation like a wildfire, the best time to limit the damage is at the beginning. And it's really, really effective to know for the employee to know that they actually do have an advocate and a liaison to the whole work comp system. So they're not going to be left alone fighting an insurance company to try to get what they need.
Yes. Then another unique thing I think we talked about is that it's a mobile first aid service. It'll run out to the job site or what have you. You know, how does that work for you guys?
So really simply, they just call into obviously if the injury is life or limb, they don't call us. Or sorry, they don't call us. They go right into an ER, call 911. But for 99% of injuries, they're going to call into our internal triage unit. Our triage unit is going to record the statement at the time of injury. From there, we're going to dispatch an injury technician to the employee's location and treat them on site under the OSHA guidelines of first aid. So the reason why I'm saying on site under the OSHA guidelines of first aid is first aid has two different definitions. One's under the labor law code and one's under the work comp code. And so for us, we operate under the OSHA guidelines, which allows us to use exactly what an employer can have in their medical kit. So if you got a paper cut, you're not submitting that to work comp. We use the exact same stuff that you're legally allowed to have in your medical kit. Our folks are just trained to do that, and then we carry all the professional liability. So the benefit of that is we keep 87% of the injuries that happen in the workplace from ever incurring any claims costs at all. Which
Awesome.
again, a lot of it.
Is there a cost to the client for the actual service visit for that?
Yeah, it's $500.
Okay.
Yeah, $500 per. So the way we look at that is this has two big benefits. Is one is it doesn't hit their experience mod, which is a big deal.
Right.
Two is that when underwriters look at accounts, they weigh frequency way more heavily than they do severity. So they're always worried about the severity ones, but if you have 10 claims that are $10,000 and you have two claims that are 100 grand, the underwriter is going to look a lot more favorably on the two claims. So they understand that frequency breeds severity, and you have 10 of those things. One of those is going to be one or two of those are going to pop to be a litigated claim and cost a lot of money.
Makes sense. And then are you offering kind of return to work programs too for the clients, or how does that work?
Yeah, we do that as well too. So what's really cool about a return to work is if you look at someone like focus on intervention or reemployability, it might take 2, 3, maybe sometimes 4 weeks, especially during COVID, to get a placement. So we get everybody placed within 24 to 48 hours, which is really cool. So we don't think any indemnity costs on a claim is acceptable. Obviously, if it's a more severe injury and it's going to be over the primary threshold for the employer, well, at that point, we should let the insurance company pay. So that's a little different in NCCI states, but here in the WCRB, there's something called the primary threshold. I don't know if that sounds familiar to you, but
No, I don't remember that one.
okay. So it essentially means on your experience model worksheet, every employer in California has a primary threshold. This can vary from $4,500 up to $75,000, depending on the size and scope of the operation. So the larger, more hazardous the business, the larger the primary threshold. And what this actually is a dollar cap on every single workers' compensation claim. So what that means is if your primary threshold is $21,000, only the first $21,000 of a work comp claim is actually impacting your experience model and future premiums. If you have a $100,000 claim, only the first $21,000 is impacting you. So with that in mind, is if we know that the medical cost is going to be under the primary threshold, like let's get the person back to work for sure. If it's over it, let the insurance company pay.
Got it. And does on that return to work, does an employee actually go back to the client's work site, or do you have them set to go somewhere out, like another service?
Ideally, they go back to the client's work site. That's
Yeah.
best case scenario. So they're doing something productive for the client. If not, like focus on intervention and reemployability, they put them with nonprofits.
Got it. Like a Goodwill or what have you.
Goodwill, yeah, exactly.
Okay. And then the other thing is like, so how is this you talked a little bit about underwriting and how that's you're getting a good reputation with your underwriters. How has it impacted your relationships with the carriers and contingency bonuses, like the financial benefit to you, the agency, for having all these incredible programs in-house like this?
Yeah, so one of the downsides going to PIB is we don't negotiate our profit sharing. They do all that on the back end. It is, some of them are tied to loss ratio, some of them are tied to growth. So there's always different like incentives that are out there. So we're not super concerned with our profit sharing. It's not a huge number for us right now. But we are looking to build our own carrier and start taking some underwriting profit. Like we recognize when we're giving someone 10 million bucks and a 6% loss ratio, like we're leaving a tremendous amount of money on the table when we feel like we're doing a lot of that work. So that's kind of move the conversation to like maybe we should start, insuring some of this ourselves.
Oh, makes
A
sense.
lot of money.
But I guess the carrier relationship, they gotta love you for the 6% in general. Like you're
Yeah,
getting all kind of favors for this. I mean,
yeah. Yeah, it really, really helps. So we get in a sticky situation, the client who maybe went, uninsured for 6 months and now has like seen the light on what they need to do. Like we're going to get looks from carriers that other brokers just won't get because they know the client's been educated. They know that the client's going to pay an additional fee to us, our subscription model, to like solve this problem. And so they're better protected to risk and know that the client's been educated on how important it is to do return to work, to make sure they're documenting everything, all that kind of stuff.
yeah, I mean, is your program just so solid that it has some kind of internal fraud prevention pieces with it in a way?
Yeah, 100%. So everything we do is all documented. So all the text messages, all the phone calls, all the emails, everything is in writing. So it allows us to, if one of our employees or clients' employees call in, like, okay, we get their story right when it happened, not after they talk to an attorney, not after they talk to their doctor, any of that kind of stuff. So essentially it puts us in a position where if someone's trying to commit fraud, we have a lot of data and a lot of tools to go put that on the insurance carrier to fulfill their obligation to the client. Additionally, we partner with a company called Strike Investigations, which is really, really good. A gentleman by the name Chris, he runs the thing. And it allows us to, like, should the client ever say, hey, this is a red flag claim, we get someone out investigating immediately.
Smart. And the client pays for that service too, right?
Typically, we bill it back to the insurance company.
Oh, you can. Oh,
Yeah.
yeah.
They don't always go for it, but that comes in the expense portion of the claim, which is the defense and investigation portion. So they
That's
typically have to approve it, but like if we go out there and say, hey, like you guys weren't getting on the phone, like we had to go do this, we knew where the employee was, like we had to go do our job.
Oh, they gotta love that, even if they don't pay for it,
Yeah.
that you're taking kind of the initiative to get that handled quickly, because that's the piece of, that's the biggest part, is the quickness. I
Yeah.
guess, would you say that's like the bigger difference of the control aspects of like outsourcing all these different areas like you used to versus in-house is just the total control piece of it? And
I would say it's the transfer of information that's most critical, which allows us to control it more effectively. So the left hand needs to know what the right hand's doing. So our triage unit needs to be able to talk to our employee liaison and let them know exactly what happened, what they're dealing with, what their family situation is, so they can actually appropriately take care of the employee. And all that folds up to the claims manager so we can inform the claim adjuster on exactly what's happening, what information we have to make sure that the employee who's legitimately injured gets the highest level of care possible. So it's like the benefit of taking it in-house has been incalculable for us. And it's also a major advantage. Like I know I can go into, a Gallagher client or a Marsh client, they might have a lot of the same resources that we do, but they're outsourced, and so there's just a lot of loss in the inefficiencies of having multiple parties try to handle one issue.
P&C agents, have you run into Byberg, which is a Berkshire Hathaway company quoting workers' comp for either your prospects or clients? Well, great news. Insured Solutions, a national MGA, has an appointment that is set up to allow you to quote, bind, and service Byberg at your agency. And the coverage is in all states. It's A-rated. Startups are even accepted. There's $125,000 maximum premium. And some of the tough industries they write are construction, transportation, that includes towing and parcel delivery, manufacturing, security guards that are armed and unarmed, motor mediation, and many more. So go to our website at insuredsolutions.net, click the Get Appointed link. We'll get you logins for you and your team, and can set up a webinar for training if you'd like. Also, feel free to email info@insuredsolutions.net, and I can handle the submission myself, or call 770-402-5343. Be glad to speak to you and give you more detail. Thanks. Like you were saying earlier, like trying to sell that to a client about internal services versus the outsource model that most of these agencies use. I guess you just go back to the number, like you said, right? I mean, if your mod is this and you had the same broker for 5 years, then that means it doesn't work.
100%. By definition, it doesn't work. And most clients don't know how much their brokers are making. Unless you're on the health insurance side, like the broker's making 10 to 15% of the work comp premium every single year. So if your premium is double what it is, like your broker's making twice as much money. And as soon as you kind of walk through that, they're like, oh yeah, I guess he does take me golfing and brings a nice Christmas present, but like that's costing me $200,000 a year. So it's like there's a lack of education from the employer side. And so our job is to educate folks on how it works, and then we don't have to sell them. It's like, all right, well, this is the problem. Who else do you know solves this problem as effectively as we do? And the answer is usually like no one. So we're in a good spot.
Right. So in terms of like reduction, like how long does it typically take when you guys get involved to start for the client, renewals to start reducing? Is it like the first year, the second year? How does it take to integrate and get going?
So we do a few different things. One of the things that we do is we do a data review. So we go back 5 years and we dig through all the data that's been reported from the insurance companies over to the NCCI or WCRB and look for errors. We can retroactively recover overpaid premiums by that direction. And then on the renewal, we go to just like if you go to your broker and you have your Accord applications and you're trying to get property insurance, like is your building sprinklered? Is it concrete tilt? Is it all these things that allow the adjuster to say, hey, this is a better risk than someone who's not sprinkled. We do the same thing, but just on the workers' compensation side of pieces. Like, well, here are all the things that they're doing, and then we bolt on to what we're doing. And so this is a better risk. So it allows us to actually get better quotes than another broker would because it's a better protected risk. So they get the results like right away. The experience model is a little different because it's always 1 year in arrears and takes 3 previous years. So that takes a little bit of time to drop depending on when those claims happen. But yeah, that's what I'd say. It's a long-term play.
Right. And how about, give me some examples of client feedback after a couple of years of being entrenched in it. Are they like in shock, like how incredible everything's, so fast and everything's happening quickly?
Yeah, it's really cool. We're very white glove and holding the employer's hand during the whole thing. So from onboarding, we do an extensive onboarding on setting up the protocols for post-accident drug testing, who needs to be notified, let them play around in the portal, see how that works. We're pushing out like a text message deal right now so they know exactly who's back to work, when they're back to work, all those kind of things. And so there's just a level of transparency that we've been able to give through technology, which is huge. And then obviously it takes some time, but on our website, we have, I think, like 18 client testimonial vids. So we have a media guy on our team who will go out and say, tell us your story. And so we have a lot of folks just telling their story from moving from Marsh, from Gallagher, from Lockton, and what their story actually looks like from a dollar's perspective. And that's super helpful to us. But yeah, the data is all on our website. It's pretty profound what can happen. It just takes some time to do.
Right. And you have come up with like a pricing model that's kind of based on the size of the client. So you're making sure you got the right, basically, revenue for the
Yeah.
overhead it's going to cost you to do these, perform
Yeah.
these services.
That's been a moving target. We've lost money on clients just because we had no clue what was going into it, how much work was there. And we underestimated the work we did know. So that's happened before. So this past year, it was like a year and a half ago. Yeah, probably a year and a half ago, we raised prices for the first time. And most of our clients, I'd say 95, just took it on the chin and be like, all right, I get it. You've never raised prices on us. 5% were pissed off. And I understand that too. But we had to do what we had to do to try to get our margins go in the right direction.
Right. I guess, wage inflation too,
Yeah, it's like when I've told other people, hey, we have a dozen people on our claims team with like 50 employees, they're like, what the hell is going on? How are you guys functioning? And so we do that through our subscription model. So clients will pay us an additional fee, and we look at that as like you're just buying insurance for your work comp policy.
That's funny.
Yeah. Yeah.
It's terrible. It has to happen like that.
It's terrible. It has to happen, but like that's the nature of it. And there's just moral hazards all over work comp. That's really what it is. Like most employees know that the insurance company is going to pay out, and they don't understand. I think 50% of employees think that work comp's a state benefit, and it creates this crazy incentive to like take advantage of the work comp policy. That sucks.
Yeah, I mean, I think I ran into one where I think this firm of the old days of this will date to me here, but they still produce Yellow Pages, the book.
Whoa. Yeah, dude, that kind of thing.
Yeah, and
That kind of stuff.
so and so what happened is like that code was like in California even was like $1 rate or $2 rate. It's like a sales like rate.
Yeah.
So and it was a very large company still. They were just like the ones that helped distribute the book, print and distribute it. And anyway, so they were just they didn't offer healthcare because they used work comp as a healthcare program.
Yeah.
And they were
That
just
kind of stuff, man.
like the highest mod I think I've ever seen in my life, like a 6.0 mod.
Yeah.
So to your point, I mean, even some clients could know on purpose, like they were doing it on purpose. I couldn't believe that, they weren't somehow targeted for,
Yeah, you get a
fraud.
couple of attorneys in there trying to do that, which happens all the time too. Yeah, I've seen mods over 1,000, and
Wow.
what is going on? How does this even take place? How are you guys still in business?
And then what about your clients? Like, do you have clients, even though they know it's against them, or prospects, I guess it'd be prospects that still don't get it. You're explaining how all these things work and they're fighting you on it still. So
Yeah,
is
that
that just not a
That happens
fit
all.
for you and the agency?
Not a fit. I mean, that's really kind of our task, is to educate folks, and if they're unwilling to learn, like, okay, well, this isn't going to work, which is nice. Like, why we don't quote insurance is like, unless you look at this the same way we do, like, we're not going to see eye to eye. So that's why we focus on education and then essentially try to peel it back. It's like, what are we missing? And typically the responses are like, well, my broker gets me like better schedule credits and premium discounts than you can because he's got a great relationship with an underwriter. And you can't stop someone from thinking that. You can educate them like, hey, your broker's getting those scheduled credits because they're available based off your previous experience. That's what's happening. Obviously, if someone has an affinity program, some kind of captive program, like, okay, you can probably get better rates from that, but that's like less than 1% of the deals that are going through. So most brokers justify their existence by saying, hey, I negotiated a really, really good rate, but you didn't see it, but this is 50 grand lower than they initially started. Could be true. That could definitely be true, but that's available for any broker that's out there. And so it's like, yeah, you get a lot of folks that are just stuck in their ways and don't want to change and don't feel comfortable firing their broker that they've known for 20 years to hire someone they met on Zoom, which
That's really important what you said as well, in that you're going to pitch the risk management program first And
Yep.
then there's no buy. Then you'll quote the insurance if they buy into the risk program.
100%. Yeah, there's no
I
point
love it.
exercising our team's time to go try it. Like if someone's with ICW, keep using them. They're with ICW and the ICW wants that account. We're not going to bring in a quote that beats it. So you're working with your broker not because they're more like effective at actually solving a problem, but because they have the market that like we could access to. We just can't because the other broker blocked us out. And so it takes a little bit of time for folks to start getting that through their head. But thankfully, most brokers are older and kind of stuck in their ways. And like I don't see a ton of other agencies starting up, so it puts us in a really great spot to go take a lot of business with folks.
Right. I mean, I know the goal of an agent is to just get the commitment up front to handle the insurance for the client. But if it's a prospect they've never met, it didn't come from a referral, that is a challenge to,
Everybody says they try to do that, try to get the broker record, but like if you get the information, you're fucking quoting it. Every broker does that. They know it.
exactly.
Guys in their team's time. So like we've never quoted I shouldn't say never. We've only quoted when we can't take over a market. So we get access to the entire market. If we can't take it over, like, okay, if we can't take it over, we work on a consulting basis. So I would say 5 to 10% of our revenue, we don't write their insurance. We just consult.
Now, will you take over midterm, by the way, on a BOR, or do you wait to the renewal so that you get,
We take over midterm, which is like another issue with cash flow because you might
yeah,
take on someone who's got 40 open claims and we take it over in February and they renew in January. So we're not going to start getting paid on that thing for 14 months, which
dang,
sucks. So
wow.
that's a hole in our business model, but we're playing the long game with all of our clients and saying, hey, if this works, like we're going to be in bed with you for as long as you guys are in business.
I mean, that's got to have worked out though, because like the client's got to see a difference because you guys are so.
Yeah, it usually doesn't take too long for them to see it. Like 3 to 6 months, as soon as they have their first injury and their employee tells them about their experience, like, oh, this is superior, it's better.
And
So it's
what about like general risk management services? Do you try to rely more on, do you have someone focused on that with the client, the overall for their
yeah,
industry, or
yeah. We use Got Safety for a lot of our stuff when it comes to the safety aspect of it. They're a really good organization. Will go in and essentially say, here's what you need. Here are the safety meetings you have access to. Here's how you should run them. Here's how you should document them. They do a facility walkthrough saying, here's where all of your exposures are, if OSHA's to walk through. So it's a good tool for sure. We just don't have the capacity to do that right now. We want to stay in our lane. We have a really good partner for that.
right? And that's not as crucial probably as, of course, like in-house claims, in-house nurse triage,
Yeah, it's
employee
like
liaison. Those are the keys right there.
most folks are doing that already. You don't see a ton of businesses out there that just aren't conducting safety meetings and aren't having like the carrier come through and do a facility walkthrough and say, here's all the stuff you need to clean up. They're all doing it right now. It's just negligible compared to like the actual job of injury data and claims management.
And then, what was I going to ask you? So, as far as the future goes right now, anything new that you think you'd like to add in terms of this, your services, maybe new tech or anything else that you're thinking
Uh,
about?
yeah, we're doing a bunch actually. So I kind of alluded to like us taking on some underwriting risk, which we want to do. One of the things is like it's again just taking it in house. Is how do we keep doing that? How do we make sure that we have control? How do we make sure that our system is utilized in the way that we want it to be? So that's one piece. We have a technology piece coming down the pike, which is essentially functioning as like an Uber but for injury management. But the big piece for us right now is like we just need brokers. Like one of the things that I've recognized, and it's really hard to explain this, but like a good broker, a solid B broker is doing about $100,000 in revenue, new business revenue a year. Someone goes out and does 200,000, like sweet. And so when I go to other brokers, I'm like, hey, dude, I did $1 million in new business last year. It's not because I'm a great salesman. I'm okay at it, but it's because we built our product. And so I know that if a producer's out there doing like 100 grand a year, we give them our product, they can go do $400,000 or $500,000, no problem. And so it's just getting that information out to folks, which is like really important for us. Is like we need more folks on the team. Like we built the product. We just need someone to come in and sell it. So we're kicking around the idea is going outside and not getting insurance producers, go and get vetted sales guys because Work comp's benign. It's like a very easy coverage to know. You don't need to know about that insurance, but like you need to know our product. And so that's a big piece for us is we need distribution. Distribution is like our key linchpin of the whole thing. So
Makes sense. Yeah, because like you said, you're not quoting anything yet, until they buy into the system and the product.
they're just going to
So
collect signatures. It's not fucking super hard. Not after we built it. Like once most prospects see this, like, oh, this is game changing. So it really puts folks in an entirely different position than they usually have been as a producer role, which is like, I hope I get the information so I can quote this. I have a really good beat with applied underwriters and maybe they'll do this thing. So it's like it's an entirely different sales model, entirely different revenue stream that you can have. It's cool. So that's like been our big hiccup is finding those producers that want to change it up. Because most folks that like change shops are going to like Marsh, Newfront, USI, like a bunch of insurance agencies that like pay up. They pay a bunch of money up front. So they might pay you like 100% of your commission for 2 years. They might give you stock. They might do some other stuff and they're just waving a ton of cash at you. And for folks that have like $400,000 or $500,000 book, like, oh, that's life-changing money. You know what I mean? That's a down payment on a house. That's a bunch of stuff. And so we're in a position like, well, we offer 50-35 commission, like very generous when all you have to do is go out and collect signatures, but we don't have the cash to go give, 100% commission for 2 years. We don't have that. So it's like, do you want to play a little bit of a longer game and actually go out and do a ton of business? That's what we're looking for. So it's like
so therefore having to go outside of the insurance industry to get away from these bigger shops paying those kind of upfront, higher salary arrangements.
yeah.
I mean, so when you described that, that was more for people, producers who have experience and a book are getting those sort of offers, right?
Correct. Which
Gotcha.
is sweet for the agency. I mean, getting a book, like especially in California, people just move over their books. There's no non-competes out here, no non-solicitations. The law just went into place, which made it even harder to enforce anything like that.
Right.
If you have the relationships, like you can move them wherever, and everybody knows that. And so that's like even in the acquisition model, if you're buying an agency in California, 80% of your revenue that you're purchasing is owned by the agents themselves and not the owner of the agency. Like, are you going to go pay 20, 12, 13 times EBITDA on that? Like, I would never do that. That doesn't make sense to do because those agents can just leave and take their book whenever they want. So it's like, yeah, that's the trick.
Got it. And then anything you want to speak to about the culture? Because you guys are pretty fun guys. I've like thought of like
Yeah.
baseball games with you and everything else. Like I'm assuming that everyone's or most people are fitting into that fun environment you guys created too, right?
Yeah, the culture is like paramount. It's everything for us. Like I guess me, Jeff, and Dallas have a vision for what we're trying to build, which is like money being the byproduct. It's like, let's build a product so good that like that makes no sense for people to leave us when it comes to clients. And then for our culture is like, how do we have a culture that gets everybody what they want? And so it's very much like, how does Whiteboard come along, every single one of our team members, and like say, where do you want to be? 5 years, let's map it out. Let's get you where you want to go. And obviously, like the fun stuff is like extra. All that's extra, but we love each other. We care about each other. Our core values are like guiding every single decision that we make for the most part. And those are, those are paramount to keeping a culture going in a company like effective at what they do, because you got to have buy-in. And so the only way to do that is recognize that like the team has to put the individual first and the individual has to put the team first. It's that trade-off.
Makes sense. I want to come to one of your holiday parties or something though.
Done, dude. You're invited. Let's go. Yeah. Yeah, they get rowdy.
Or I'll just like I'll stay in another hotel, but like I'll just go to one of your retreats,
Yeah. We just
I
want to
won't bother you. I'll just like when you go to the dinners and everything, that's when I'll show up.
show up. Yeah. I love it, dude. Let's do it.
Oh man, well, hey, well, first of all, like, thank you for opening up the kimono, to go through what you're doing. That takes a lot, says a lot about you and the agency that you're willing to help the industry at large, because a lot of agents have again, seen these things, but they've never seen it presented and captured the way you're doing it with the, with your risk management model. So thank you for that piece. And if anybody, like, if an agent or someone has a carrier has a question, what's the best way to get in touch with you?
My email is just johnjohn@whiteboardrisk.com. All of our information's on there. Best way to reach me is through email. And yeah, if anybody has any questions, any agents out there listening, like, give me a call. If you're in another state, we can work with you there too. So we're looking to grow
Yeah, we
out.
can talk about that. You're operating in all states, right?
Yeah, yeah.
Are any producers that like this product that are listening? If they're not, satisfied, well, we don't want to steal producers away, but
I
anyone.
do. Hey, speak for yourself. Yeah, I would like to. Yeah, it's like that's the only thing that I can keep going back to is like, hey, it's your life, man. Like, obviously, loyalty is super important, but like everybody should have a vision for their life and where they want to go, like what they want to do, who they want to be working with in their life. Like that should be a non-negotiable. But people feel captive to like these agencies that have been doing stuff the same way for a very long time, and it's like not benefiting anybody. You're not benefiting your clients because someone like us can come around and give a lot more value to your clients, and then B, like you're not producing near as much revenue as you could. Not because you're not good at sales, but because you don't have the tools to actually go out and usurp a 10-year relationship. So it's yeah, that's what I'd say. It's like if you're
Definitely.
stuck, you just feel like you're doing 100 grand a year, like there's better ways to do it.
No, agreed. And then, again, congrats on the growth, what you built. Again, I saw it from the beginning, so I just like how aggressive you guys are, and keep on rolling, man.
Appreciate it, Eric. Thank you.
Thank you. Thanks again for tuning in to Insurance Shop Talk. If you enjoyed our deep dive into the latest trends, please don't forget to like, subscribe, and hit the notification bell so you never miss an episode. Until next time, I'm Eric Stein, and this has been Insurance Shop Talk.